Shuri. It is Friday, December 27th, 2024. We got two more trading days next week, and then it's done. So let's see how the next few days tax loss selling will reveal itself as far as year-end performance. It's gonna be bad. Probably the worst performing years I had in a while. For sure, worse than last year and the year before. Let's go right into it. First up, Martin Marietta. It is at buying spot. It came right off the channel, right? And the fib, combination of both the 61.8 fib and the channel, nicely. So if you missed it the first time, perhaps if it pull back again, you might get a second chance. But I like that. I like that channel a lot. Let's go back 3-year chart just to show you. Here, this is the channel right here. Okay. It came out of the channel for about 5 weeks, right there, and then it's back in the channel, and then it channel high. Right. So yeah, I like this channel. So yeah, it's a buy. VMC, the competitor, behave a little bit better. A little bit better. This chart is so busy. Let's remove a lot of the stuff that is behind us to make it less clutter. We don't need to see that anymore. Okay, that's cleaner. We got the fib going. It came down to a fib as well, the 38.2. That's a good spot. You got the confluence of the 200, the 100, and the fib. That was a strong buy spot. So yeah, if for those that pay attention, yeah, I mean, sure, it beyond the gap fill right here, right? But still, if you bought it at the gap fill down to the fib, it's $2. That was a nice $2 range to accumulate late last week, and you only got yourself a nice bounce. Okay, nice. Now up there, okay, you're gonna get the confluence of the full retracement up there, along with the 50 and 20 MA meeting. So on any kind of move into those resistant, get out. Let's take a look at some defensive stock that got beat up pretty badly since the election. Wow, who would have thought, right? Who would have thought? I mean, they got the election bump right here. That was the election bump, and then briefly 4 days, and then ever since then, nasty. It almost filled the gap, basically. Let's see, the gap was 476.13. Uh, 477, yeah, so not quite, okay, not quite, but I had an alert there that didn't trigger, so I figured it didn't fill the gap, and so watch out. Okay, I like to see a gap fill complete, to be honest. You know, a lot of time when it doesn't quite completely fill the gap, it will later. But you are looking at a very sharp potential breakout here. Let's see, is there any kind of, okay, if you want to use that line, you see that line, the trend line, that kind of line up with the 20 MA perfectly the last month. If this thing goes sideways for another week or two, potentially that would be the spot that it can break out. Okay, so I'm not bullish on Lockheed Martin yet. General Dynamic, which I have a small position. I don't hate here. Okay, I don't hate here. I just think the whole sector is so hated, and I'm watching for the sideways movement until the 20 MA come down to a point where it can leap over and run. So not yet. For me, the time to add to General Dynamic is not yet. Maybe in another week or two until the 20 MA come out and come down more and flatline. Okay. Raytheon, oh, behave better compared to General Dynamic and Lockheed Martin. Yeah, I would say it behaved much better. It came down to basically ref low. Not quite, but you can see bio was coming in. Okay, the business of rockets. Rockets is still more popular than planes and jet fighters and submarine. Yeah, the rockets. The rockets still doing well. We still spending a lot of money on rockets. We need to replenish a lot of rockets. No doubt, this FIP right here and this 20 MA, I think if it can break it, it can giddy up. Okay, because right now this white line, the trend line, is where the battle is, right? If it can get over that white line, then the bull market might be back for Raytheon. Last one of the group. This one got beat up pretty badly. I thought this white line was gonna help, right? Because that's the gap fill. It did. And then on election day, it popped. So that it for a while, and then it joined the rest. It joined the rest of the defense, and then that was ugly right here. I can't explain why it did that badly. I didn't look at the news yet, but let's see. Let's go back 3 years. Yeah, so it came down to the zone of support. So I like it here. I like it here. See, look at this. I like it before at the white line. I think it would not be a bad place to accumulate here. Okay. Okay, so you got resistance, potential breakout, and then support, consolidate, right? That's a 6 weeks plus time frame. That's a long sideways, okay? A nice, some people would refer to this, nice bull flag, okay? Because if you draw the flag, right, you got this triangle right here, the white line, and then you draw the trend line up. That's your bull flag, right? Or the breakout triangle, ascending triangle, and then boom, it hit, and then yeah. So I like it here. If I had to pick my top favorite defensive play, now that I look at the chart, I say Textron is the one. Okay, is the one. Buy here between 76 and 73 point something. Okay, whatever the 73.94 is a 200 weekly MA, something that it has not seen in over 3 years. Let's go back 5 years. Yeah, the last time was 4 years ago. Okay, the pandemic breakout, end of lockout move. Okay, so yeah, I like Textron the most. Next up would be General dynamic.